Well, I think low risk are countries where we feel that there's a rule of law, and we are mainly exposed to Australia and very happy to be here, but also to Chile, Peru, Brazil, Canada and Spain. And really those haven't changed much in the last couple of years. I don't believe in jurisdictions suddenly becoming flavor of the month, because they generally go off quite quickly. Well, referring to mining in particular, I think we're very interested in how we can make mining a greener sector, how that technology which is disrupting and destroying a lot of other industries is actually a beneficiary to our sector and increasing demand, and how we can use more pure commodities to make money and help create a clean environment. Well, I'm glad you've raised this point about the shortage of conventional funds, because I think it is a big theme and it hasn't really been discussed as much here as it should have been. This sector is very capital intensive, it's desperate for money to grow, and there isn't much of that capital around. And the combination of passive investing and ethical funds have really squeezed the amount of money available for mining. And that has created more opportunities for royalties. So there is more for us to do, and it is very much an investor's market. So it's good in a way, but obviously there are broader concerns about how the industry gets access to the capital it needs in order to grow in the way the world needs as well. Well, we have been positive on uranium. What happens in the mining sector is what everybody's given up on turns out to be the next great thing. And you've seen uranium this year go up almost 40% from its lows. So we're pleased with that. What's interesting as well about coal has been that the pressure on coal has created very little new coal supply, and coal prices have been much higher and much stronger for the last couple of years. So we're bullish actually on both coal and uranium, but we also look to diversify the portfolio and are looking to get more into other commodities like copper or nickel, zinc, which have recently suffered with the trade war, but which we think provide long-term good prospects. Well, I think at the end of the day, you need to have a vision as to how the world evolves, both in terms of commodities and jurisdictions. But ultimately what orderly capital does is it creates its own value by being a change agent. I think one of the things our sector needs, in addition to money, we've talked about that in one of your previous questions, is high quality operational management. That's another limiting factor, and that's what we think we bring to situations. So, we look for fixable trouble, which we can then take advantage of, and there'll always be those opportunities in the mining sector. Well, I think IMARC, in a Australian and Pacific context, is differentiated. It attracts people globally, but obviously regionally as well. Australia is, for us, the most important market, and we find coming here and waving our flag a very useful exercise. It's very efficient. I found the one-on-one meeting arrangement very well done, and it's a pleasure to be here.